So I've got some opportunity here to ask some more questions, but to do it in a big context. And apologies, but my screen is only able to share on one thing. So can you see my screen okay?
Yep.
First thing, so a little bit of big connection then. So let's see how this flows. Can't go too much into the big stuff. Most people have possibly seen this on this session anyway. But one of the fundamental things underneath big is that strategy is necessary to achieve purpose. And at the front end of this, the idea is we have shareholders, owners, government ministers, whoever, decide what our purpose and goal is. We have the regulatory impositions. I think you've referred to those, Stephen. And then there's emergent matters, opportunities and threats, I guess, that are giving us chance to do something else or avoid extinction. And with understanding of our current state, we've got this process of vision to strategy, and this is uh, typical strategic stuff. I think this is probably coming before the portfolio process. I think what we're talking about in the portfolio process is once we've defined the objectives, looking at investments that would help us with those investments. So that the trick then is the tricky bit then is I think for at this stage I guess our organizations really need to help us be clear on what the relative importances of the objectives are before we start trying to do value creation, operational change, or simply running the business. So I think what do you think about that, Stephen? We've got to get the our strategy right, the goals right, and be able to balance between the objectives before we even come to try and work out what the investment opportunities are.
But kind of yes and no. Yes, at least in theory. But the whole point, I mean, I have to say, my our principle number one is strategic. Oh, sorry, principle number two is strategic clarity. But if there isn't strategic clarity, what's that mean? We don't do anything? No. So what I'm saying is then, at least for the portfolio, we need to be clear about what are our objectives in
Yeah.
given whatever our strategy is. It may be in
Yeah.
those high level terms. It may not be prioritized. But my answer to that other question previously was therefore that's why the portfolio needs to say, given those objectives, what are the relative weightings we should allocate to those objectives? Otherwise, you can just sit there and we can't do anything because the board haven't made their minds up. Um,
So make assumptions basically.
well, it's
If you've got
well,
nothing, no direction, make assumptions.
well, evidence-based assumptions. Yeah, I
Yeah.
mean, Bob Mornan from Canada said business cases contain assumptions that masquerade as facts. Yeah, I'm not keen on assumptions. I'm an ex-auditor. No, the idea, the whole point is to say no. We need to kind of, if you're going to equal. I mean, I'm not a big fan of equal weighting. People in prioritization, the story is usually, what rating are they? They say, what it's category one. Okay, 1A, 1B, or 1C.
Yeah.
1A. Okay, 1A1, 1A2, or 1A. You've got to force. Yeah, you've got to force decision making. Choose between which is more important.
So if we haven't got the strategic process right, we still got to live and work and improve. So we um, that's a battle we fight another day.